Hello and welcome to Wisdom Bites. Hope you're well. Thank you once again for joining us. Very much appreciated. And in today's packed program, I'm going to be looking at the longer picture, the medium picture, and the shorter picture with Bitcoin and see exactly where we are in an overall bigger picture view. We're only months away from the end of the bull market. And what we really want to do is to actually keep our focus on when and where this end of the bull market will be. So this is where the title of the video comes in terms of how close we are to the end of the bull market. We'll do a few measurements. We'll try and elicit as much information from the charts and see what they're telling us regarding when the end of the bull market will be. And as per usual, we'll have a look at the wider markets as well as the 60-day cycle for the medium and the shorter term picture. So if that sounds interesting, then you know what to do. Get yourself a cup of tea, sit yourself down, eyes on the screen, and let's get cracking. But before I begin, the usual polite reminder, please remember everything in my videos is just for educational purposes, so please always do your wider research before you make any investment decisions or any swing trade decisions. We're not in the business of making predictions here. I have no interest in being right or wrong. All we're trying to do is to elicit as much information from the markets to give us some guidance in terms of the direction of the Bitcoin price in the long term, medium term, and the short term. I'm going to start off straight away by looking at the main theme of the video and look at exactly when we'll end up for the end of the current 4-year cycle. It's going to be somewhere in this region here, but let's elicit the information from the charts and see exactly what they're telling us. The first measure I'm going to look at is that when you look at the chart, you can see that there's a certain pattern when we break the highs of the previous peaks and you take a measure from there to the end of the bull market. So the yellow lines are the top of the bull markets here, here, and here. And we're hoping somewhere it's going to be anywhere around here for the current cycle. So this is the first measure I'm going to take, that from the break of the previous all-time high to the top of the bull market, and we're on the monthly time frame here. How long is it going to take? So that's the first break there, and to the top we're talking about 8 bars, i.e. 8 months. So that was the first cycle. In the second cycle here, you can see that this is the candle that broke through the previous peak. So from there to the end was again 8 bars. So we have 8 months in the first cycle, 8 months in the second cycle. And in this one here, from the break to the 69,000 high, we get 11 bars. So that's 11 months. So it's 8, 8, and 11. So if we were to superimpose the 8, 8, and 11 from where we are now, this is the break that we had from the previous all-time high. And if you take it to the 8 months, that would take it to July this year. And if we take it to the 11 months, then that would take it to October. So on that particular measure, from the break of the previous high to the end of the bull market in each of the cycles, what we've got is basically anywhere between July and October. And one of the reasons why I'm doing this measure is because there's a lot of information out there where people are expecting the top of the bull market to be in the first quarter or the second quarter, and this has never actually happened in any of the previous 4-year cycles. So whatever measure people are using, they may be basing those judgments on fundamentals rather than the technical analysis. Now with the technical analysis, while I respect a lot of the fundamental analysis out there and I like to keep on top of that, my own belief is that the fundamentals are already baked into the charts. So the charts are an aggregate of everything and give you a much accurate picture. So if we now use the second measure, which is from the bottom of the first cycle to the top of the cycle, because what we want to do is we want to know when the top of the bull market is going to be here. So this was the bottom here in the first cycle. Take it to the top, that's 37 bars. And in the second cycle, the bottom was here and to the top was 35 bars. So we got 37 months, 35 months. Then in the third cycle, this was the month where it actually bottomed out in December 2018 to the top, and that was 35 bars again. So you get 37, 35, and 35. So if we superimpose those three in the current picture, we bottomed out here at 15,400. And from there, 35 bars give us November 2025. So 35 bars are giving us November, and 37 are giving us January 2026. Now, considering that the first cycle topped out in November, the second one in December, and the third one in November, we've never had January as the end of the bull market. So that would be a first. So the chances are, the probability based on the charts would be that November seems to be more of a higher probability play rather than January. And if we use the third and final measure, which is going to be from the top to the top, so obviously the first cycle didn't have a top, it had a start. So if we take it from the beginning of when Bitcoin started to the top here, that's 40 bars, that's 40 months. Then from that top to December 2017, that was 49 months. And then the previous cycle was once again 47 months. So we have 40 months, 49 months, and 47 months. And obviously the two previous cycles would be more of an accurate picture than the 40 months. So if we take 47 and 49, that would give us a much more accurate picture of when this, so 47 months would take us to October this year, and 49 months would take us to December. So you can see that on all three measures, which seem to be very accurate in terms of what's happened in the past, this gives us a balance of probabilities that from July 2025 to the end of 2025, that is where the most likely end of the bull market will be. So now that we've got some sort of a ballpark figure and where we can target where the end of the bull market is going to be, then we use our Bexit indicators that I've shown you many times. So once we get past the mid-year 2025, then we should be looking out for the Bexit indicators, provide us with a lot more confluence between them as to the top of the bull market. And obviously nobody has a crystal ball to say exactly what price it's going to be, and this is why it's much more important and logical and rational to leave it to the Bexit indicators, so that when they are triggered off and there is a confluence between them, then that gives us the highest probability play in the absence of a crystal ball to tell us exactly where the end price is going to be. So what we've really established is that based on the charts, the information it's giving us is that the likelihood is that we're going to get to the second half of 2025, and this is where we need to be focused in terms of the end of the current bull market. Let's have a quick look at some of the Bexit indicators to give us a guideline in terms of exactly where we are and what the Bexit indicators are currently telling us where we are in the cycle. So you can see quite clearly that we're waiting for the green line where it's exactly found support in the current downfall over the weekend, and the red line here. So we're waiting for the green line to cross over the red line as it's done in the previous three cycles, and it's at that point that we will be in the ballpark figure of Bitcoin topping out. And we can see quite clearly they're very far apart, but one thing we have to note here is that when we zoom out, you can see quite clearly that the trajectory of the green line is actually moving up very, very fast. And somewhere along the line here, this is going to meet the red line, and wherever it's going to cross, that is the higher probability play in terms of the top of the bull market, wherever that's going to be. And our targets are anywhere between 150 and 500,000, based on many measures that we've done over the last many months. And if we have a look at the Bitcoin top cap, this is where the blue line actually protrudes through all of the peaks previously, except the last cycle where it didn't hit the 64 or the 69. So in the 5 peaks, we got 4 of them where the blue line threaded itself at the tops of the peak. So currently, as we can see quite clearly, we're nowhere near there, but we are expecting as the price goes up for the blue line to hit the Bitcoin price. And if we have a look at the MVRVZ score, the alert that we're waiting for is this orange line, which is currently at this point between 2 and 4, to get above this 7 here, or just be around about this level. Because as we've seen, all of the peaks have gone into the red, and this is where we needed to be alert. And another Bexit indicator is the Maya multiple. This needs to be 2.4 or above. So 2.4 is when we get alert, and that's this green line you can see all across this chart. And currently, we are very much far away from that. So we've got many months to go yet. So the end of the bull market, as per the charts that I've shown you, plus the Bexit indicators, seem to be suggesting towards the end of the year rather than in the first or the second quarter that many analysts are thinking out there. So my own thinking is that just based on the charts, what we've seen so far, and of course if the Bitcoin price goes up very quickly, it goes from where we are currently to let's say 150, 200,000 in the next 1 or 2 months, then of course what will happen to this green line is that as the price rises, the green line will then take a much sharper trajectory to the upside, and therefore the cross will come much earlier here rather than much later on further up in 2025. So all the Bexit indicators are really going to be triggered off by whatever the price action is. So what we need to do is to keep an open, fluid and flexible approach based on what the price action is going to be, and keep an eye on all the Bexit indicators, with the current view being, based on the charts, that the balance of probabilities is for the end of the bull market to be at the end of this year, anywhere between July and December. And the main idea for looking at these indicators is to keep an eye on this every few weeks until we get to the end of the bull market. And of course, the end of the bull market is for those people who want to exit the market, and those who want to stay with Bitcoin and continue for the longer term can obviously do so. So whatever your position is, it's always good to know exactly where the end of the bull market is going to be, and then everybody can make up their own mind and make their own decision based on their own strategy that they're following. So that's the long-term picture between now and the end of the bull market. So we'll move on to the medium-term picture by looking at the 60-day cycle to give us some sort of a guidance as to where the markets are heading in the coming months. So this is the 60-day cycle as we find it. And what we've got so far is we've got a day 56 start of the new cycle, which is back on the 30th of December. This is the midpoint here, the white line, and the yellow line was the day of the inauguration, because our narrative was that from the start of the new cycle, we're going to go into the inauguration and for this to become a sell the news event. So the initial reaction was to come back down to this level here with this Dragonfly Doji candle, which seemed to have put a bottom in here. And this is the daily chart, so we haven't actually closed below this midpoint of the Dragonfly Doji candle. And that would have provided a very good support, but obviously it's now gone below that. And if you watched last week's video, you'll know that the narrative was that with this long-legged doji candle that we've been following ever since this printed here on the 5th of December, what we know with this long-legged doji candle is that it tends to keep the price within its own band at the top, which was at 104,000, and the bottom at 92,000. And the characteristics of this is that you normally get a fake out to the top and a fake out to the bottom. But within a certain consolidation range, the subsequent price action from the long-legged doji candle stays within the tops and the bottoms of its own range. And this is exactly what we've got so far. And currently we're on day 35, that's today, Monday the 3rd of February, and currently we're in the mid-cycle decline here. This candle would have suggested that the mid-cycle would have come to the end here, but now obviously we're getting a deeper decline. But once again, the green line of the pi cycle is providing a lot of strong support, and with the confluence at the 92,000 here, where we've bottomed out and found support numerous occasions, then this may well be the bottom of the mid-cycle decline before we go into the end of the cycle here on the 28th of February. And the narrative has always been, for many months now, that after a big move here, where from the 49,000 we've increased up to the 109,000 by around 120%, you're going to get a period of consolidation. And on a balance of probabilities, the likelihood was for this not to actually break above this particular high of 108,000. So this is what we're expecting going forward. The medium-term picture, as painted by these candles and the price action, is for us to go into the end of the current cycle at the end of February within the range of this 104 and 92,000. But once we get into the end of the cycle, hopefully we'll find a bottom here, anywhere around 96 to 92,000. And what we've got to look out for as we go forward is that from where we are currently, if we can consolidate at the top range of that long-legged doji candle, anywhere between 109 and the bottom of this Dragonfly Doji candle, which is at 97,000. So if we can consolidate going into the end of the current 60-day cycle here, that would set it up for a break to the upside into the next midpoint, which would be 30 days from the end of the cycle, wherever that's going to be. So going into the midpoint of the next cycle, which would be around about the end of March, that would give it a very good opportunity to break above the 109,000. So this is where the narrative is over the coming few months. And once we do leave the 109,000 behind, then those people who have studied the previous 3 cycles will know that as we get to the final months of the bull market, it will leave this type of price behind very, very quickly and have a very rapid rise for the next few months. So let's see where it gets to, but that's where I see the price for Bitcoin going over the coming few months. So expect more consolidation within this range and then a breakout in the next cycle, sometime in March. And if we have a look at the news of what's driving the markets currently, the main news really is that the current administration in the USA is engaging in a trade war, and this is what's rattling the markets. But there is one analyst here who thinks that this trade war will send the Bitcoin price violently higher. And this is from the Bitwise executive analyst Jeff Park. And what he's saying is this is his undoubtedly highest conviction macro trade for the year. And if we scroll down here, we'll have a little bit of an insight into what he's saying. So his narrative is this, that the tariffs will send Bitcoin prices violently higher in the long term due to a weakening of the US dollar in global currency markets and lower the yields on the US government securities. And this will lead to international trade correcting the trade imbalances and make the US exports more attractive. So that's his narrative. Let's see if it plays out. But certainly the prices going violently higher would fit into the 4-year end of the bull market cycle. So if we have a look at the wider markets and see exactly how that picture is fitting in with the Bitcoin price, if we start off with the DXY, the dollar, we've had the breakout from this neckline at around about the 107. We came back and retested it and now making another move to the upside. However, if you look at the RSI, currently it's showing a bearish divergence with the level of the dollar going up and the RSI flattening out and even having a lower high. So it is in the process of topping out, and I would expect over the coming months for this to come down. And as mentioned last week with the SPX, we are coming to the end of the 60-day cycle, so we have reached a higher high here, having made a right translated cycle, which didn't look very possible when this was coming down. But certainly the cycles are playing out, and now we're getting into the end of the cycle. We're getting into the end of the cycle decline. Whether we're going to find support here, it looks with a higher probability it's going to come down lower. So around about the 58 before we get into the next cycle. So what we need to have a look at is some signs in the candlesticks, and we'll be able to gauge that with the price action setting a bottom for the end of the cycle. But if we zoom out, we can see quite clearly that the trajectory for the SPX is still very much to the upside. And until this trajectory is broken, we have to assume that the bull market for the SPX is continuing. And as long as we don't break the lows like we've got here, so these are the established lows that we've had along this journey here. And as long as we don't break those lows, there is no need to worry about a topping out of the SPX. And if we have a look at gold, this is really looking very bullish. We've had the breakout from this symmetrical triangle. We've been following this price action. We had the breakout as expected, as this was a continuation pattern to the upside. And now we've got a very big move out of that symmetrical triangle. So the weekly picture is looking very bullish for a continuation to the upside. The monthly picture is looking equally bullish. We've had this big Marubozu candle close at the end of January, so can see that the solid trend is to the upside here. And on the daily time frame, we've got the shooting star candle, so we can expect over the coming days for this to have either a consolidation or a little bit of a pullback, maybe down to these levels to find support and then to go again. So this is where it's showing a little bit of weakness on the daily time frame for a little bit of a pullback and consolidation before gathering the energy to move to the upside. Okay, if we have a look at the shorter term picture, and of course we've got this range of the 104 and the 92 that we're expecting the price for Bitcoin to remain at least until the end of February, where the end of the current 60-day cycle will be. So what happens in the coming few days? If we examine on the 4-hour chart, we've got a long wick at the bottom on this 4-hour chart, and it looks like we found support here, as I've shown you with the pi cycle, and there's obviously confluence with the 92,000 support of the long-legged doji candle. So what I'm expecting from here, if you do a Fibonacci retracement to the bottom here, so what I would be expecting is a bounce either to the 38.2, which is at 96,000, or the 50% Fibonacci at 98,000, and the more likely figure of 100,000 at the 61.8. So these are the three targets that I would be looking for either today or tomorrow, and then we can expect a 61.8 pullback here before we move into the end of the cycle. And if we move on to the daily time frame, we can see the current daily candle is trying to put a bottom in here. And if we can get a close like this dragonfly doji candle with a long wick at the bottom and a little body at the top, that would be a very sure sign that there is a very high chance of getting up to the 61.8 at the 100,000 level. So those are the things to look out for in the coming couple of days. Okay, so I'm going to leave it there. I hope you found value in the video. If you did, then please do remember to like and to subscribe if you haven't already done so. And if you've got any comments, leave them in the comments below. Until the next time, take care, stay safe, and I'll see you in the next video. Bye for now.